Peter, can I also ask you a question about the previous point, which is the debt issuance, the bond issuance replacing the maturing bank debt? In this type of, the stock market, domestic China stock market is ripping, as we all see every single night. What's the impact of such a white hot stock market on a bond issuance? I mean, if banks are not the main buyer, who's going to buy bonds when everyone, year to date, Shenzhen market went up already 40%?
Yeah, good question. I think the Chinese stock market is a bit of a enigma at the moment. It was the best performing stock market in the last half of last year, 52% increase in principal. No other major stock market has performed the way China's has, and that's very mysterious because the economy was slowing down. I think the professional investors in China, the institutional investors, are probably a little suspicious about the stock market and would be very cautious to commit large amounts for long periods of time to the stock market, precisely because it is such a strange phenomenon. They would feel safer, I think, to invest at least a significant part of their funds in the bond market. And given the fact that the opening of the bond market to local governments, over-indebted local governments, which will generate a highly differentiated yield pattern, will make it more interesting for institutional investors to continue investing in bonds, because they can now earn on average perhaps better yields than they could in the past. Institutional investor participation in the stock buying in China is still relatively limited. The New York Stock Exchange is dominated by institutional investors. The Shanghai Stock Exchange and the Shenzhen Stock Exchange continue to be dominated by individual investors, people with a short-term horizon, relatively little knowledge of the economy, and very speculative intentions.
I have a related question on this. Clearly, the government was encouraging speculation in equities starting like the third quarter last year, all these press reports and et cetera. Turned a blind eye to these crazy increases in margining that's happening at a very rapid rate. We've seen a second round of encouragement in speculation in home purchase, which is what I'm going to call it. You might say it's upgrading demand or whatever, but they got rid of all the home purchase restrictions last year, and now we've seen a second wave of keep buying real estate. We know also that the government owns the credit markets. So what is the policy philosophy behind having the government basically own bubbles in credit, equity, and real estate? They cannot let any of these asset markets decline. I don't know why they put this pressure on themselves.
Well, I don't claim to understand the Chinese stock markets. As you said, Brian, right, that much of the buying in Shanghai and Shenzhen in the last 7 to 8 months is explained by the margin buying, which was not a big feature in China. But they have been listening to foreign advice that they have to develop their capital markets, allow more adventurism, allow margin buying. About 6-7 weeks ago, Beijing became very concerned when they learned that so much of the stock buying was in fact on margin, and they began to clamp down on it. The immediate stock market reaction was that to decline by 7 or 8% the next day. But once that was over, we see a resumption of these growth patterns. In the last few weeks, the stock markets have continued to outperform the expectations again. Now, I think Beijing probably is a little worried about that, because I think much remains credit financed, which is very dangerous, of course, when you get a turnaround. Beijing does not fully control what's happening in the stock market. The bubble, I think, the bubble in the real estate market, which was the other bubble, has essentially been taken care of, in the sense we haven't seen significant price increases in real estate for a year and a half now. In fact, prices have been declining. So there is no longer a bubble in in the real estate market. The fear I have is that it may go down too quickly, too much. So the big question now is the stock market, and I'm not wise enough to understand what is going on there.